First of all, I want to begin my analysis today with a very important thing. If somebody tells you that trading is easy and you can become a trader just dedicating 20, 30 minutes a day, well, I'm not going to say that they are lying, but please be very careful and take care of yourself. You cannot apply this logic to everybody. Please be very careful with your expectations as well, with fancy ads, fancy Lambos, and so on. And please do your research and be very clear about what you're doing. It's possible to make money with trading, but it's not something it's going to happen overnight. There is lots of things you have to learn. It's not about magic signals or magic recipes or strategies. It's about many things. It's about mentality. It's about knowing yourself. It's about knowing what kind of weaknesses you have, your psychology, and many other things. So please be careful. If you begin with trading, do it slowly. Begin with simulations and then jump into a very small account. Try strategies. Look how it works, how you react to the different challenges of trading, and then you could start thinking of doing something bigger out of it. I'm the author of the book What Professional Traders Really Use, where I break down the methodology professional traders rely on, without indicators, without shortcuts, and without magic signals, just using price. Welcome to a new analysis of the market structure for the S&P 500 futures contract. We are going to analyze today the micro S&P 500 future, and we will begin with the higher time frame as we always do. As you can see, we had in the previous days a very, very, very wide range, and we can draw the range like this. It's not mathematics, it's more or less if we match the swing highs and the swing lows. Most of them are more or less at these levels, these two levels here. And that's the main structure if we look at the higher time frame. It could also mean that if we are rotating around this wide range, it could also mean that we could see price moving up to this level here, which is the oscillation level, as you probably know. I also explained that in my book. The distance between the swing lows and the lower line of the range is most of the time the same distance as the distance between the upper line of the range and the next swing high we could achieve in the future. What we don't know is when this swing high can happen or could happen, but this is a structure which repeats quite often in the market. So let's also analyze other main trend lines and support and resistance levels. We have a major resistance level here at 6,834, and there is, of course, a major resistance level at these previous swing highs. We actually arrived there. We can also check on the lower time frame and see what kind of structures we see there. But in the higher time frame, we also see there is a clear trend line here. This is a kind of expanding triangle. If we draw it like this, this would be the expanding triangle, which could be very, very relevant for today's trading session. If we check on the measure moves, as you know, I like measure moves. I also have a chapter in my book about measure moves, which you can download for free. Check the link in the description below if you are interested on that. So measure moves are the length of the legs we see in uptrend and downtrend. movements. And in this case, we have an uptrend, and we can check on these legs. As you can see, there is a kind of repetition, and we could also check on the third leg, which is this one. And according to measure moves, the third push upward could also end at this level, which means there is a kind of confluence level here. What we also can see is that there was a clear trap here. The sellers tried to push price down, and there was a false breakout at this swing low. There was a huge reversal from that level, which was the beginning of this new trend upward. We could also check on the highest volumes. It is very interesting to see that the highest volume happened at this level here. And this means, for me, this could be a major support level for the future. Therefore, I'm gonna represent it like this. I wanna have two of this so that you can see there is a special area there. And there is also here another one. If you wanna be very precise with this analysis, it's also a very, very interesting level, this one, because it's also the resistance level, which became support level for the next leg. So let's go to the smaller time frame. And in this smaller time frame, we see a very, very clear structure, which is actually this range here. So this range is clear, and I think this could be the main clue for today's trading session. And there is also, as you can see, a kind of expanding triangle, which is this one here. And this could also be relevant for the next trading session. So let's take a look at confluence levels. There is a main trend line here, which is this one. Oh, that's very nice. And there is this expanding triangle. As you can see, this trend line, the expanding triangle, the measure move, and the previous swing high, all of them are at the same level, more or less, which means for me, this is a very, very important level. It's a confluence level. I always mark them with a C. I expect to see sellers at that level. I don't know if they're gonna get the reversal, but I expect many, many buyers being sellers at that level because they're gonna exit their positions there most probably. This is also a very, very interesting thing because for us means we have a lot of space underneath, and we could go short from that level on if we see the right signal candles and the right entries. We could also check on the measure moves on the lower time frame, and as you can see, there is one leg, there is two legs, and there is three legs, and this could be the fourth leg actually of this short-term uptrend we had from this previous range. So this would be the fourth measure move, and we'll see what happens today. I could imagine that price is gonna reverse at some point because we are too high and we are at a major resistance level, and we will see probably quite a strong reversal today. The other option, in trading, everything is possible, could be that we move to this oscillation level, because this would mean that this range has ended the normal range behavior, rotating from one side to the other, generating an oscillation level at this area. You can check on my book if you want to know how to trade ranges. There is also a chapter about that where I explain in detail how they work. So, but mainly the idea is that when you have a range, in this case, the range is a wide range, you have like a rotation of the price around this range, and the previous distance from the swing low to the lower part of the range, this distance could be also the distance from the upper line of the range to the next swing high. So that's mainly the theory, and that's not only theory, it's also the behavior of the market. It happens many times. You can also see that in small ranges. In this case, you see that this undershoot under the range is the overshoot over the range. This is a behavior we see all the time. This is the overshoot over the range, and this is the undershoot under the range, which is almost the same distance again. This distance is almost this distance again. So it happens many, many times. So this is something you can also use to develop trading strategies. As I said, check on the chapter ranges in my book, and everything is explained there. So that's the main analysis of the S&P 500 for today. Today is February 25th, 2026. There has been huge moves in the last days, so always use a stop. Don't think that price is going to reverse so quickly or going to stop so quickly, because we are seeing huge runs. So that's also the reason why you shouldn't fight the existing trend. As we have right now, we have a clear uptrend. Don't fight it. Wait for a lot of confirmations and for the right entry signals if you want to go long today. And I hope you have a good trading session, and see you next time.